The new enhanced child tax credit is not free money. Let me say that one more time. It's not free money. What does that mean? It means that unlike the stimulus checks that thousands of people had received before filing their 2020 taxes, they did not have to repay that money. One more time, they did not have to repay that money, even though after they filed their 2020 taxes, their income was higher than their 2019 income, so technically they were not eligible for the stimulus. As a matter of fact, some folks played it smart and wanted to receive their stimulus check before filing their 2020 taxes on purpose, knowing that their 2020 income would disqualify them and therefore not have to return that stimulus money. In other words, plenty of people saw this as free money, knowing full well that the IRS would forgive having received stimulus checks in error, even though technically they were no longer eligible. So many folks took advantage of this small loophole. This, ladies and gentlemen, is not the case for the child tax credit that will be issued in monthly installments beginning in July 15th. So it's very important to be very clear on the rules that could hinder many families next year who are not aware of the consequences of having to return all that money they receive if they do not calculate their income adequately. Especially when we're talking about families that, like our old friend Jack,
I deserve no mercy.
Look,
I'll make it up to you. I'll tell everyone what I did.
didn't really mean any harm. They just didn't realize that having higher income than is allowed could cause them huge headaches next year. But not only that, there are at least 6 reasons why some families may want to opt out of the monthly payments and instead choose to receive the credit in one lump sum next year if they are eligible. The IRS has already begun sending out the first of 2 letters alerting families about possible eligibility of the new enhanced child tax credit. And in this video, I'm going to share details with you regarding at least 6 situations in which you may want to consider opting out of the monthly payments and how to do it before the payment schedule begins. All this and much more. If you have kids at home, you're not going to want to miss this. I'm JP, this is Harvest Wealth, and we're starting right now. So if you're like me and my wife and still have young children at home and are going to be impacted by this new enhanced child tax credit, you're going to want to pay attention to this letter or these coming letters that the IRS is starting to send out to families, alerting them to the possible eligibility for this new enhanced child tax credit, because it is significant depending on their ages. And you're going to want to do, or you're going to do one of 2 things. You're going to either completely ignore it or just say, you know what, the IRS is going to take care of it automatically, and it's probably just sending me a letter saying, hey, you know, this is what's happening, and basically just accept it. Or you can really take a good hard look at it and see how it's going to impact your family, not only with receiving money, but any potential consequences. And really, I think that's the kind of the point of this video that I'm making. Just had a lot of questions from clients saying, hey, JP, what do you know about this child tax credit? And, you know, how is it going to impact me if I receive the money? Because I heard that you can actually opt out of the money, which is the case. And that's exactly why I'm doing this video, is because I really want to make sure not only that my clients, but people that I know, you know, friends, family, just anyone out there not really aware of some of the really important consequences of potentially receiving this money and then having to repay it or give it back next year, which obviously you don't want to do. You don't want to be in that situation where you take all this money and then next year the IRS says, hey, you know, I want that money back. You didn't follow the rules. And so this is not like the stimulus check where I'm going to explain in a minute. You know, folks kind of took advantage of playing, kind of gaming the system a little bit and waiting to pull the trigger on doing their taxes after receiving that stimulus checks, in order, knowing full well that the IRS would forgive mistakes, right? So it wasn't really a mistake. They intentionally waited to do their taxes to receive that money, knowing that their 2020 income would be higher actually than their 2019 income, and therefore be disqualified. So people took advantage of that, knowing the IRS would forgive and basically they could keep the money. The IRS is not going to do that this time. Matter of fact, they have a portal which is already live. They're updating it continuously, so it's not fully functional. In other words, there still isn't all the things that you can do or are going to be able to do, such as, for example, you know, updating family information and whatnot. So right now you're basically just able to do 2 things, last I checked. But they do have this portal where you're going to be able to adjust kind of as you go from July when the payments are starting all the way until the end of the year, what your income is, because they're really using an estimate, right? They're guesstimating based on your 2019 and 2020 income what your income is going to be for 2021. And so if your income comes in higher than that threshold of eligibility, then the IRS is going to say, hey, next year they're going to say, we want that money back. So just some really important things for you to consider, and I'm going to lay them out, especially with these 6 scenarios in which you may really want to just say, maybe I'm gonna hold off on that money. You keep it. It's not going to go anywhere. I'm going to receive it anyways in one lump sum next year. So, and why you may want to do that, even to prepare for just for financial planning reasons next year. So, the first thing is, in my experience, ignoring something doesn't really have the best results or yield the best results more often than not. It's those little things that you have control over that you actually exercise your right to control that are going to benefit you in the long run. So just crossing your fingers and hoping that things work out, and the IRS knows what they're doing, so I'm just going to ignore it, may not be the wisest choice. So really take a look at that letter, and I'm going to explain to you in a little bit more detail sort of what the rules are, so you can prepare and make sure that your family is in a position to not only take advantage of this, but when to take advantage of it. So I think the first thing to kind of cover, even though it's sort of been out there already, not only the news are talking about it, but social media, YouTube, Facebook, and whatnot, your friends are talking about it, is this idea that, or concept that it's kind of the first time that they're giving folks this enhanced child tax credit. Number one, that it's enhanced, so it's more money, but that they're giving half of it in advance. In other words, this money really, or this credit, we're supposed to, folks that have kids at home are supposed to be receiving it in 2021 when we file our 2021 taxes. In 2022, receiving it in 2022 when we file our 2021 taxes. So the taxes for the income that we're declaring for this year. But the IRS said, with the government, and all the creative ways that they're trying to, just give more money. So it's kind of a workaround, if you can see. I look at it as the government saying, how else can we sort of go around the system and avoid having to fight? Because you remember last year all the fights that Congress got into, the Senate and the Congress back and forth about just even providing those basic stimulus checks. It was just a big fight. So they kind of came up with this creative idea to work around and say, let's give people more money through this child tax credit, which it'll be a lot easier to get in people's pockets. And what they did is they thought of a way to give at least half of it. And I think the reason they did half is so that precisely to help people that would mistakenly, calculate or factor their income for 2021, so that anything that they have to pay back next year can be offset by the other half that they're going to receive next year. I don't know if that makes sense, but I think that's why they are only giving a half of it in advance, so that you can kind of protect yourself on the back end. And have that sort of cushion in case you made a mistake and didn't calculate your income accurately, or your kids, you said you declared having a child that is going to be 17 still this year, but turns out before December 31st, now they're 18, and so you're going to have to pay that money back. So that's one of the things to consider. I'm going to talk about in the 6 situations why you may want to opt out of receiving that enhanced child tax credit. So very important to keep that in mind as we're talking, that this is actually an advance, right? So they're giving you half of this credit up front, which is actually supposed to be issued next year for the 2021 taxes in 2022. So you're getting it in advance. So remember that. And I think just to, so that we all know what we're talking about here, and it's probably redundant. Again, you probably heard it already a million times on YouTube, Facebook, or your friends or the media. Although I think the media could do a better job of breaking it down for people. It's not been really covered as much as I think people deserve to have the information. But the child tax credit is essentially $3,600, so it's actually up $1,600 or $1,000 depending on the age of the child. So if the child is under 6, it's $3,600. If the child is between ages of 6 to 17, okay, not 18, 17 is actually the cutoff, then it's $3,000. So you get half of that up front. And so it's important to remember that the rules have changed, and not only have they increased the amount of the child tax credit, but they have actually reduced the income threshold. So it kind of made it a little harder for people to qualify, precisely because it's more money. So whereas before it was $400,000, I believe, for married filing joint, and $200,000, if I'm not mistaken, for head of household. Now it's $150,000 for married filing joint. So they reduced the income thresholds, and I think that head of household was 112. So if you're filing head of household, 112 is your phase out in order to qualify for the child tax credit. So if you have a 2021 income higher than those thresholds as a married filing joint couple or head of household, you're going to be disqualified. So, if December 31st, your income, you're looking at your statement, you're saying, oh my gosh, I'm over the limit, you're going to have to pay that money back. So it's important to remember, keep in mind, be aware of the thresholds, and then that portal that I'll talk to you about in a minute, where you can actually adjust your income and, be letting the IRS know, hey, I'm making more money. I'm actually going to want to opt out. So you can actually prepare if you know that you're going to be above that threshold. So as we all know, those of us that are parents, raising kids, especially in the state of California, if you live in the state of California, is super cheap. It's expensive, right? They got to eat. They have to have a roof over their heads. They have to go to the doctor. They have to, wear name brand shoes, of course. They all have to have iPhones. So it's not cheap raising a child. And so $250, $300 additional money per child every month sounds great. Right? I mean, who doesn't want an additional, $550, $800, $1,000, depending on how many children you have or how many qualifying. Remember that IRS is very particular about keywords. Qualifying dependents you have, it's free money, potentially, right? We're going to talk about the consequences, but who doesn't want that, right? Monthly income, additional income for the next 6 months. Coming out of the pandemic, right? Coming out of a huge crisis in which, some folks, it wasn't just mom, but in many cases, mom and dad lost their job, right? So you had folks, I know people that, unfortunately, their immigration status is not, favorable to unemployment insurance. So plenty of people who worked for a construction company or what have you, didn't even have access. So they lost their primary job, their primary income. Maybe their spouse didn't even work to begin with. And so now their entire income is gone and they don't even have access to unemployment insurance. So you talk about difficult situations that we're coming out of from 2020. So 2020 was just terrible. And so things have begun to turn around. The economy is it really is opening hard. And so you actually have businesses that are understaffed and having trouble finding, staffing. So things are changing slowly but surely, and they're going in a positive direction. That said, some people are still struggling financially, right? Some families are still, they were just hit so hard that an additional $1,000 a month because of their children, towards their children, right? Towards helping raising these kids with all the things that entails for the next foreseeable 6 months. It's huge, right? And it's a game changer for many families. So from the outset, it's important to say that, hey, if you need this money, right? If you're still struggling to recover from 2020 and everything that it brought negative financially, take advantage, right? Take the money, and if you know that you qualify and that there's no way that 2021 income is going to, cross that threshold of making you ineligible next year, by all means, this video is all about, hey, do what is best for your family, right? If you're in a position to receive this money, to keep it, and it's going to, bless you, it's going to benefit you, take the money. I'm telling you, take the free money. This video really more is for people that kind of are going to be in a situation, in kind of that off, weird situation of maybe having to consider not taking that money for the reasons that I'm going to outline. But if you need the money, take the money. Another quick thing that I wanted to sort of mention that I think is important moving forward in kind of this period of the next 6 months is record keeping, right? A lot of us are really bad at it. Some of us are a little bit better. Wherever you land on that, it's important to have good record keeping. Why? Because when the IRS comes back next year, collecting, saying, hey, we sent you this money, you were not eligible, so we need to have that money back. You want to have good record keeping month to month, be able to prove, hey, I didn't receive this money. Here's my bank statement. Get familiar. If you're not familiar with online banking and you're just not hip with apps and all these things, hey, get your kids to do it, or YouTube it. Figure out how to become very good at pulling up your bank statements and saying, hey, I don't have any deposits here. I don't have any checks. Or if you do have deposits, make sure to record them. Get yourself a little notebook, something, a pad, write it down, take a picture of it if you need to. This is what I receive, or this is what I didn't receive from the IRS. So, because what happened with stimulus, if you remember, when you did your taxes, don't lie. When your tax preparer asked you how much did you receive in stimulus last year, or how many checks did you receive, a lot of folks didn't even remember the amount or or how many checks they received. So, and the IRS didn't send a statement, right? They didn't send you a statement saying this is how much you received. They just, they had tax preparers asking people so that they can qualify for the future or for the coming stimulus checks, but there was no statements. And so the IRS is saying that their intention is to have some type of statement, especially because it's monthly breakdowns of payments, that they are going to issue a statement next year. But don't rely on the IRS, right? Don't rely on the government to do it for you. Do it yourself so you're prepared, cover your behind, and make sure to have good record keeping of anything that you receive or don't receive from the IRS. Okay, so 6 reasons why you may want to opt out of receiving these monthly payments. The first one is kind of, it's kind of an emotional issue at the same time, because it involves, difficult relationships, right? And I'm talking about folks that are divorced, separated, and, maybe alternate their children. So they'll claim their children. One will claim their children 1 year, and the other will claim their children or the children the next year. So they alternate 1 year and 1 year. So imagine if, let's say, the husband has the kids this year, right, and he's claiming them, and so he receives, the husband or the ex-husband receives that child tax credit, and and who's going to say no, right? If you're unaware, hey, I'm receiving this money, this is great, right? But then next year, the ex-wife, when she files her 2021 taxes, she claims the kids, right? And so what does the IRS do? The IRS is going, when the filer claims the children, they are going to award the children to the wife, to the ex-wife next year. So what does that happen? So what does that mean to the ex-husband? What happens is then he's going to receive a friendly letter from the IRS saying, hey, your wife is getting this money because the children, she's claiming them on her 2020. Remember, we have not done our 2021 taxes yet, only our 2020. So next year, this is in advance. Remember that. Next year, when folks are preparing their 2021 income, if the ex-wife or the ex-husband claims the children and the money was received by the ex in 2021, the IRS is going to want that money back because they're going to issue it to the one claiming the children next year. So it's very important to be mindful of that, and just, hopefully you have a friendly relationship with your ex and be able to sort of plan ahead and say, okay, well, who's claiming the children, right? Who's going to get the money? How are we going to split it up? Because you don't want to be caught off guard next year with a surprise, because then your ex, then it's going to be a fight, right? And it's going to go back to kind of the way things were if you guys are on friendly terms right now. So make sure, as difficult as it is, have this conversation with your ex and say, hey, let's work. It's still time, right? You still have 2 weeks before the payment schedule begins to work out how we are going to, coordinate who receives the money and who's going to claim the children next year for alternating. So that's one reason you may want to potentially opt out of those monthly payments. If you are in that situation of having to alternate the kids, you just may want to not deal with it and say, let's just receive the lump sum next year. I'm going to claim the kids next year. So let's just, not even worry about the monthly payments. The second reason has to do more with garnishments. And so unfortunately, it's not something that's protected this time around. So if you're getting garnished, you're not going to have that protection, and that entity that is taking your money from your refunds will have access to your money. So, instead of dealing with having to give your money up, maybe next year you're already out of that garnishment. So you're going to receive the money in one lump sum if you're still eligible next year. So it's another reason to say, I'm going to opt out of the monthly payments because I'm getting garnished, and I just don't want to deal with that. So if you're getting garnished, reason number 2 why you may consider opting out of these monthly payments. Now, number 3 is personally important to me, or it's very significant. Being a financial advisor, if 2020 taught us anything, it's that the importance of having some type of financial buffer at home. And what I'm talking about is, if you've sat down with a financial advisor, you know the importance of how we harp on having an emergency fund, right? And I remember 2007, right before the great financial recession, we were still telling people, you need to have at least 3 to 6 months of some type of liquid cash, whether it's under the mattress, if you don't trust the system, in the bank, somewhere where you have access to it. It's readily available for you to pull out liquid cash in order to protect at least 3 to 6 months of your expenses. Should you lose your job, become sick, whatever happens, you get fired, you quit, that you have those at least 3 to 6 months while you transition into new employment. But then the Great Recession happened, and we saw how tragic that was for a lot of families. So I personally, along with many of other colleagues, started telling people, 6 months minimum, right? 6 months to a year is what you need to have. And then 2020 happens, and who would have thought, right? Something so huge that impacted the entire world. It wasn't just centralized to one particular state or country. It was the world. So we saw how people were impacted that did not have some type of buffer, right, to to handle that financial impact of having not only mom but both mom and dad lose their jobs, right? So having an emergency fund, and I was talking to, just a couple of days ago, I was talking to a client or potential client. We were visiting, talking about retirement planning and all these things about the future, and kind of putting the pieces together, working backwards, and we hit on having an emergency fund, and how with very little money during tax season, right, and come March, April, those months when some people are fortunate enough to have, or maybe even planned it out to have a refund, how much you can do with it with as little as $1,000, $2,000, not to speak of $5,000, $6,000, $7,000 or $8,000. What you can do, number one, to strengthen that emergency fund, and number two, either continue or start some type of long-term savings plan. So you're talking about retirement, purchasing a home, down payment, college fund, all kinds of things that you can do for your future with something as little as $1,000, $2,000. Again, not to speak of $5,000, $6,000. So, if you want to set yourself up, if it's in your means to do so. In other words, many of us or many folks out there now potentially not only are fully employed again, are back in business. Some were fortunate to even have raises, right? Or have both mom and dad now fully working and making that income. So the need for that additional $3,600 or $3,000 spread out in monthly installments isn't as great as it is for other people. So you may want to say, you know what? I don't trust myself with the temptation, because what happens is, unfortunately, in our experience as financial advisors, we've seen it all too often where people, when they get an increase in income, right, whether it's a raise or a bonus, whatever it is, we all have a lifestyle, right? We're accustomed to. This is our lifestyle, and this is our world. So if there's an increase in income, naturally, what do folks do, right? Rather than taking that increase, that difference, and saying, I'm gonna invest that, I'm gonna save it, I'm gonna do something with it other than spend it, we increase. We increase our income, but we also increase our lifestyle, right? So if we couldn't afford that new car, that new iPhone or whatever it is, so we get more money, so we're going to spend more money, right? I deserve it. So we kind of have that I deserve it attitude. And rather than looking down the road in future years when we're no longer working, we kind of look at the now and say, well, if I increase my income, well, then darn it, I'm going to increase my spending, right? And not probably the wisest decision to do all the time. And we're not here to tell you what to do with your money. It's your money, right? You earned it, you sweat for it. You can do what you want with it. We're just telling you what the consequences of doing or not doing something 10 years, 20 years are going to be. And so you can potentially be in a better or worse situation financially. So with something as little, just a seed money of $1,000, $2,000, working it, putting it into something boring like the S&P 500, you don't have to, go buy crypto and all. No, you just put it in a nice index, let it grow. Don't look at it, close your eyes and just forget about it every year. And before you know it, 20 years go by. Now you have this stack of money that you didn't have before, and you don't have to worry about where your money is going to come from in retirement. So enough about that. I'm going to get off my soapbox as far as that. But another reason why you may want to opt out of those monthly payments, to say, hey, set yourself up next year. I don't want the temptation of having to, think about potentially using that money to spend it or waste it on something. I'm just going to get that nice lump sum next year, and then fortify my emergency fund or some type of savings for the future. A lot of folks depend on that refund also. I just thought about that. It's kind of part of their budget for the entire year. So if you're accustomed to that, if you're used to receiving that refund and having it go to the mortgage and insurance and all these things, you're gonna miss that, right? Because you're getting half of it now. So your refund next year potentially could be a lot less. And so be thinking about that. If you're not comfortable with receiving less money for your refund next year, tell the IRS, hey IRS, sorry, I got my little puppy here wants to come and say hi. Next year, say, I'll receive that money in one lump sum next year, and I'm just gonna forego those monthly payments this time around. So be thinking about that. It's important. So reason number 4 why you may want to opt out of these monthly payments has to do with being aware of you potentially having more income that actually pushes through that ceiling of the income thresholds for this year. So if you have a side gig, or a side hustle as they're called, maybe you started an online business, you got a raise, or that you're going to get a raise, or maybe a bonus is going to be significant enough to actually bump you over above that threshold, that income threshold that will disqualify you from the child tax credit, then it's definitely a reason to say, you know what, IRS, I don't even want to deal with it. I know for sure my income is going to cross that by the end of the year, so I'm just going to forego those monthly payments. That way you avoid the headache of having to repay that money back next year, figuring out how much you owe the IRS. You don't want to deal with that. So if your income is going to be higher than those thresholds, forget the monthly incomes and just actually opt out. And I'll show you how to do that in this partly in this video, because it's not fully integrated the portal yet to be able to opt out. Although there is, I think, some initial features that you can begin to look at and play around with. But I definitely will want to make another video, let you guys know exactly step by step how to opt out if that's what you in fact want to do. And then reason number 5 is kind of related to reason number 4, and maybe you just don't trust the IRS, right? Maybe you just have this distrust for the government, and you think that maybe accidentally, even just accidentally, they might issue you some type of overpayment, even though you were not eligible. So if that's the case, because remember, these payments, they're going to start coming. If you don't do anything, when you get that letter, right, of eligibility or possible eligibility, if you don't do anything, those payments are coming, right? They're gonna make their way to your checking account or savings account or whatever it is, unless you say, hey, I don't want that money. So they're coming. So if you just don't trust the IRS and think that they for sure are gonna issue some type of overpayment, even accidentally, don't mess with it and just opt out. Click the button and say, hey IRS, I don't want these monthly payment installments. And then finally, reason number 6 is that if you know that you have a child that maybe falls within those years, that age bracket, that is going to actually be turning 18 before December 31st, then go ahead and opt out, at least for that child, because they have to be 17 and under. So 6 to 17, if they turn 18 in 2021, that disqualifies them. So here you have received all these 6 months, and then come December 31st, if that's their birthday, they turn 18 and boom, now you got to pay that money back. So what's the point of receiving all that money only to have to pay it back, and then potentially be in a situation where, depending on all your other income, and now it could be significantly higher, what you have to pay back in 2022. So now what about the folks that are going to choose to receive those monthly payments? Definitely want to be aware of that portal. I'm going to show you in a second how to get there and kind of how to fidget with it a little bit, but definitely be aware that portal is out there. So you want to be updating information, your income, family status, and whatnot, which brings me to the second point for folks that are going to opt for those monthly payments. And that's, questions that I'm getting about, hey, JP, we're having a baby in 2021, or we just had a baby and we didn't obviously we didn't claim that baby last year because the baby wasn't born yet. So what do we do? Well, first of all, if this is your first baby, congratulations. You have no idea what you're in for. Those of us that are parents, or those of you that are watching this video, are probably laughing. We're laughing with you, okay? Not at you. We're laughing with you. You have no idea what you're in for. No, but seriously, in this case, again, you want to be thinking about that portal. We're not yet. I checked it a couple days ago, and you're still not able to do it. The function's not there, but there will be a function where you can actually add in your family information for any children that are born in 2021. So, a lot of folks are going to have a baby this month or next month, and so obviously you want to you want to tell the IRS, hey IRS, I want to be part of that club that's receiving monthly checks for their kids. So the IRS needs to know, hey, we need to send money to the Jimenez family, or to the Smiths, or to the Joneses, whatever it is, because you want to update that information on the portal when it's available. So I'll let you know when it's available and how you can go about doing that. But yeah, definitely the portal, be mindful that it's out there, and you want to be updating that information so you can also take advantage of that enhanced child tax credit. So as far as the portal, guys, if you go to irs.gov and then scroll down to the tab that says Get Answers on Advanced Child Tax Credit, you can quickly find the portal that is partially active. In other words, there's still some things missing. Right now, the only thing that you'll be able to do is to opt out here where it says Manage Payments, or to update your information if you're a non-filer. You're not really able to update information about your children that were born in 2021 yet. I think by August, you'll be able to do that, and also update your income. But right now, just the only two things that are available are to be able to opt out or to update information that the IRS doesn't already have. And it's something that is kind of under development stages right now, so that they're kind of trickling out what you're able to do so far in this portal. But yeah, important to keep an eye out for this portal so that you can update things as you need. You're going to need to create an IRS account, which is not the easiest thing in the world. They make it actually kind of hard for you to be able to opt out for those of us that want to opt out. But I'll try to make a video here in the near future to show you guys how to do it step by step if you're having a little difficulty with it, because it's not the easiest thing in the world. They have all these security protocols that you have to follow, take a picture of yourself, your driver's license, all these things in order to create an account and be able to do that. So if you want to opt out and things like that are important and that are going to have a potentially major impact on what you have to or don't have to pay next year. So this is it. This is the portal. It's not fully functional, but it will be hopefully by August. And hopefully we can make a video to keep you guys informed about how this whole thing is going to work. So this is the portal. And so the last thing that I want to remind folks, whether you're getting or not getting this child tax credit, as you're considering what your options are, remember, this is not free money. This is not free money necessarily. It is an advance of your 2022 filing for your 2021 taxes. So in 2022, when you file your taxes, it's a credit that you should be receiving for your 2021 taxes. I know that sounds a little bit confusing, but just trust me that it's an advance of what you're supposed to be getting in 2022, or that because I fall in that category too. We still have kids and can potentially take advantage of this, although ourselves we're going to opt out of it as well. That you could be taking advantage of this money potentially, but it comes with those strings attached that you may need to repay that money back if you don't follow the rules, or if you're disqualified for the reasons that I outlined at the outset. So be mindful of that it is an advance on next year's credit, and it's not free money. So although the IRS has given guidance, and I just read about it not too long ago, where they are saying they're calling it a safe harbor. The lawyers always include a little bit of a kind of a respite for people to, if they made a mistake, if they fell in that category of being divorced and they're alternating the kids and accidentally, that happened, they're in that situation. If you fall within certain income, so I think that for married filing joint is 60,000, if I'm not mistaken. So if you made under 60,000 and you accidentally received some of those payments, you get to keep that money, the payments that you received, if you're under that money, under that income. Head of household, I think it's 40,000. So if you're under 40,000 2021 income, you also get to keep that money. So that's the one exception where you actually can keep that money if you accidentally were not eligible at the end of the year. Other than that, you do have to pay that money. So if you're outside of that $60,000 or $40,000 range, depending on whether you're married, filing joint, or head of household, you may potentially have to pay that money back, and you don't want to be in that situation to have to fork up potentially thousands of dollars depending on how many children you have, right? If you have just one child, $250 or $300 a month, it's $3,000 or whatever it was, $3,600 depending on your credit, might not be such a big blow next year. But if you're talking multiple children, now you're talking a lot of money potentially. You're talking about $6,000, $7,000, $8,000, potentially more dollars next year to have to pay back. So just be mindful of that. A lot of people took advantage of the whole stimulus situation, and they kind of tried to play that game of waiting to file in order to get the money to then be forgiven. You don't want to do that. And honestly, 99% of the people, at least the people I work with or people that I know, are honest, hardworking people that they play by the rules. And that's really what the IRS wants, is for you to play by the rules. Although this is not a game, this is real life, and people's lifestyle is at stake, right? How they climb out or get out of that situation and that the pandemic caused last year. So a lot of real suffering out there. None of us were immune to it. We all experienced it to some degree or another. And these are just additional creative ways for the government to assist, to kind of bring that money. At the end of the day, it's money, whether it's in the form of a stimulus check or a credit. It's additional money that the IRS or the government wants to put in people's hands to be able to help them to climb out and be in a better position financially. So that's it for this video, guys. I did this originally in Spanish and put it on my YouTube Spanish channel. Wanted to include this one in English because I know there's a lot of folks out there. The reason I had or even have the Spanish YouTube channel is to help out a lot of folks that don't normally have access to this information. In English, a lot of this information is available, but I did want to specifically make it in English so that I could help not only clients that I have that are out asking me constantly about this, but friends and family and anyone out there who may not be getting the same information. So I hope this video brings value to you. If it doesn't apply to you, maybe a family that has kids, forward them this video so they can watch it, and hopefully they can find some value in it too. So that's it, guys. This is JP, Harvest Wealth, and I'll see you next time.